Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, and happy Friday, everybody. It is March 8th. We got the big day today, actually, the jobs numbers. So let's kind of jump right into it. And we'll start, of course, the big one, the non-farm payrolls. This is given to us by the Bureau of Labor Statistics, BLS, for the month of February. So we had a really hot number back in January. Remember, it kind of surprised everybody. We were expecting right around 180,000 jobs, and we had this 311,000. Now, the forecast for this month is 175,000, and wow, look at this big drop off, 20,000 jobs, a measly 20,000. Now, this looks pretty bad here on the surface, but if you look a little deeper into this number, not only did we have a really good, you got to keep in mind we had a really good January, but February was a pretty cold month. We had a lot of places like Minnesota where, there were minus 65 and stuff like that. And when you look into this, we had construction and hospitality were down. That's where a lot of the weakness came in from, and those are a lot of times are affected by weather. So uh, something we'll keep our eyes on, obviously, but this could be an anomaly anomaly a little bit. So just something to keep cautious and not to get over panic on it. Because on the other hand, we had here unemployment rate. We go from 4% in January. Forecast calls for 3.8%, and it dropped down to 3.8%. So we have obviously unemployment going down. So obviously we're still in a good position here. But again, 20,000 doesn't look good. But again, let's keep in mind we'll look to March to see if how February's or March numbers will look forward to March's numbers here. Let's see how that turns out. We also got average hourly earnings for February. In January, it went up 0.1%. Forecast was calling for 0.3%, and it came in a little bit higher at 0.4% here. This is actually the highest recording we've had since 2009, since basically the credit crisis happened. And something we'll have to keep an eye on that primarily because that could be inflationary numbers. So we just want to make sure that inflation doesn't get out of control because what's going to happen if inflation keeps spiking up, the Fed will raise rates further, and they'd rather control inflation by that. And wage inflation could be a big area that we keep our eyes on in terms of inflation. And then we got housing starts. So we had a 1.037 million analyzed units in December. So forecast for January is 1.215, and we exceeded that. We're up to 1.23, which is obviously good news. However, it's actually down year over year. It's down on analyzed units from where we were last year. So we had more housing starts January of 2018 than we do of January of 2019. So, but things are slowing down a little bit, and rates are up. So again, that's kind of to be expected a little bit. Building permits, these are kind of future housing starts. So in December we had a 1.326, and that even bumped up in January to 1.345. Again, like the housing starts, this is down from last year on annualized units. We had more annualized units last year at this time than we did this year in 2019. And again, we got a lot of factors playing in there. We had the inventory, but we're seeing the confidence level rising in home builders, which we're starting to see in here. But again, a lot of this has to do with rising interest rates. Home prices have risen so much, the affordability level. So, they're not going to just overbuild and then be stuck with a bunch of properties. So these are things that we have to keep our eyes open and see how it goes from there. Stock market headline news: stock market is down. Obviously, there are big surprise there with the job numbers, so that's played a big point in it. They're still kind of reeling from the information, from this week. There's still waiting on the U.S. And China trade talk. Getting to be a summit, but they're getting other news out there saying that they're still working on the sides of getting closer and closer uh, before they'll set a date for that summit. Part of it is enforcement of the tariffs and the talk on there. So that's one of the big things. Sticking points it seems like right now is enforcement on it. But another big one right now is this. There's a news came out of China today that there's a 20% dip in their exports for the month of February, obviously, which is not good. In January it was up like 9.1, but in February it dropped 20%. Part of it could be the lunar holiday that they had, but again, they're saying a lot of it is demand. Demand is down, so we're seeing a bit of this is just basically, these are all chain of events that are reminding investors that yes, the global economy is slowing down, and of course they don't like that. So let's see how this is playing out. The bond market's down. It was basically almost unchanged. We had to have a really nice day yesterday. We did about this time we were up about 6 or 9 basis points, and then we jumped up. We ended up closing up 19 basis points. So we could be, and we're only down about 2 points right now, 2 basis points. So I would say a lot of lenders might price in a little bit better pricing today based on yesterday's little bit of a rally, late day rally, and we could potentially see that trend continuing today as money moves over from stock market into the bond market. And then yields are at slightly higher, not by much. We're at 2.64 yesterday. It was like 4.4, and change. We're still kind of 2.64 as you hear and change here. So it's less than really 1 point here, but we're still out. But I would round up to 2.64, where yesterday I rounded down at 2.6. I'm sorry, 2.65, and yesterday I rounded down to 2.64. So still in the same range, less than 1 point range here. But again, yields are a little bit higher today, but again, that could change as the day goes on here. So that pretty much wraps things up. Rates should be a little bit better today. If anything else changes, anything pops up, I will certainly post on Twitter. So if you want to get any updates, go ahead and follow me at Mike Bjork on Twitter. You guys have a great rest of your day. Enjoy your weekend, and we'll look forward to see you guys on Monday. Thanks for watching. Bye-bye.